I'm Tyler Collins, and I'm the founder of the Mended Collective. Today we're tackling one of the most crucial skills you need in day trading: reading the charts. Whether you're just starting or you need a refresher, this video will simplify the basics and set you up for success. So grab a notebook and let's dive in.
Alright, so first things first, we're going to break down the type of charts that you can have on TradingView. This site is called tradingview.com. So here, right now we have just the regular candlesticks that everybody pretty much uses universally, globally, all around. So then there's also line graphs. A lot of people use this as well if you're trying to get those key points and things like that. But there are other type of candlesticks, as you see, volume, hollow, bars. But the main thing that we're going to focus on today is just the regular candlestick pattern. Here we have a bunch of candlesticks. Up here you can change what time frame you want to do it on. So here's a 5-minute time frame right here, and it basically, each candlestick represents 5 minutes of the day. Then you have 15-minute time frame. Each candlestick represents 15 minutes of the day. Then you have hourly, same goes, it's each hour of the day. Then you can have a 4-hour time frame, increments of 4 hours. And then you can make it larger, and each candlestick represents a week. So we're going to focus on the 5-minute chart. Now, you may ask, what are candlesticks? Candlesticks basically tell a story on a chart. With this candlestick, it's at 11:30. This candlestick's 11:35. This candlestick's 11:40. Each one tells a story. How do you know which candlestick is a buy or sell, you may ask? The bodies of the candlestick represent the opening price, the closing price, the highest point of that candlestick, and the lowest point of that candlestick. These lines that are underneath these candlesticks are called wicks. Wicks basically tell you the highest and the lowest point of that price. So you may see most candlesticks or most charts be red and green. It's a good tool or a good habit to not have your charts be red and green, because obviously as humans we think about green as buy, money, going up, success, and we see red as sell, going down, negative. You know, just all those different things can be synonymous to each other. What I like to do to rewire my brain is make my candlesticks a whole different other color. Like, it just helps me. So for me, my buying candles are yellow and my selling candles are white. They just go, I chose those colors because they go along with my business colors, and I just want to keep it consistent that type of way. So, how I mentioned about the opening and the closing price of a candlestick. Let's focus on this candlestick right here. In this candlestick, we have a wick at the top, a wick at the bottom. If you see, and if I zoom in, you'll see that's a wick, and at the top you'll see this wick. These two things are the wicks. Then you'll see this right here. This is the body of the candle, this big yellow thing. So, as I mentioned, that the yellow candlesticks are the buying candles. So for instance, with this candle, if a candle is buying, meaning going up, that means its opening price is at the bottom of the candlestick's body, and then that means in the top of the candlestick is the closing. So for instance, for this candle, this is the opening price, and this right here is the closing. So that means candle started at 9:30. From 9:30 to 9:35, it started here and it finished all the way up here. The wicks, so this is the lowest price point. This wick up here is the highest price point of this candle. So let's reiterate again. This is a buying candle because my buying candles are yellow. And another way to know as well is the opening of this buying candle is at the bottom of the body. The lowest price point of this candle is at the bottom of the wick. The closing of this body of the candle is right here at the top. And the highest price point this candle got to is up here where this wick is. So I have labeled it for you. Okay, and if we reference this arrow over here, that's synonymous to the buying candle we've made. The opening price is right here. The lowest price point, which is the wick, or in this case, is the bottom of the arrow, is the lowest price point. And the highest price point is the top of the arrow right here, and the closing is the body. Please take notes if you need to, or rewind back if so. Now let's talk about a bearish candle. So we referenced at first a bullish candle, which is my yellow candles. Now let's reference a bearish candle, which is my white candle. For a selling candle, the opening starts at the top of the body, and the closing of a bearish candle is at the bottom of the body. Right? Because if you think about it, if we draw our arrow again, when a candle is going down, it starts at the top, correct? Therefore, it's the opening of that candle. When a selling candle finishes, meaning it finishes downward, that's where it closes. So, the opening of a selling candle is at the top of the body. The closing of a selling candle is at the bottom of the body. Now for the wicks, here called the highest price point, because just like the bullish candle, the top of the wick is called the highest price point. And the wick at the bottom is called the lowest price point. So we'll copy here and put lowest price point. Okay, so just like it's synonymous to the bullish candle, the highest price point and the lowest price point remain the same. Because if you look over here at the price points, 21,260 is higher than 21,244. So the highest price point will always be the top wick of any candle, and the lowest price point will always be at the bottom of any candle. Now, once you understand candlesticks, the next step is easy. Now we're going to identify support and resistance lines. You may ask, what is support, what is resistance? Support and resistance is basically the floor and the ceiling of the market. Where candlesticks do not want to pass, we reference that as a support. Here's the support level. If you notice, price barely breaks through this area right here, this line I drew. This will be referenced as the support. Then you'll notice price actions here at the top of this area. We label that as resistance. Right? So if I were to draw an illustration, imagine these are the candlesticks. Here's our support. Here's our resistance. Price action is not passing this orange line, and it's not passing this orange line. This is the resistance. This is the support. Support levels are where price tends to stop falling and bounces back from this area. Resistance levels are where price stops rising and wants to pull back from this specific line. These levels can help you make better trading decisions on when to buy and when to sell. Most people are selling at resistance lines, and most are buying at support lines. A key motto that we use in day trading is sell high, buy low. Premium is known as sell because let's think about it in just the real world, the economy. When something's at such a high price, it's at a premium price, not too many are trying to buy it. You're not going to buy your dream car at the highest price, knowing that it can come back down in about 2 to 3 years, and you can get a better price at it where the support is. Life's all about supply and demand, so all you have to do is relate it back to the charts. It's the easiest and simplest way to do it. So if you go throughout the chart and you're just looking around, finding where is price action stopping and turning back around. For instance, I see something right here. In this area right here, I see a bunch of candlesticks pretty much not wanting to pass this area right here. The lowest point within this green box, I see prices not really trying to pass this area as support. Then we have this area right here, price doesn't really want to pass either. That would be considered resistance. Resistance is at the top, support is at the bottom. Take time to go through your charts on tradingview.com and simply just label resistance and support lines throughout your chart. Now, another cool thing about TradingView is they offer something called indicators. And indicators are simply little cheat sheets that you can have throughout the market to help you better identify when to buy and sell. So in the top, it'll mention something called indicators. So you'll see I have some favorited, but you can easily just type in anything you want. So some key indicators that people like to use are called moving averages. So moving averages are basically the average of prices over a certain period of time, right? So my favorite one is called 3MA by Dinar. So if I turn it on, you'll see that I have 3 different lines that have come up. The white line is the 200, the orange one is the 50, and the red one is the 13. I specifically like to use these 3 different EMAs because they help me identify the trend. So the white one, which is the 200, that's basically telling me the basic average of prices over 200 days, right? So if the candlesticks, and what I can also do is take it one by one. So you only see the white one, which is the 200. The 200 will tell you the overall trend of the market. If the candlesticks are below the 200, most likely price action is going to be selling. And we call candlesticks price action, just for reference. When you have candlesticks below the 200, price action is mostly going to be selling. Obviously, you need to factor that with your trading plan, your trading strategy. Do not rely only on indicators when you're trading. You should genuinely only rely on price action, but you can have different tools to help you be a better trader and identify when to buy and sell. Now, if candlesticks are above the 200, most likely price action wants to buy. But if the 200 is going through the candlesticks, that's most likely meaning that it's a consolidation, ranging type of day. Consolidation and ranging basically mean candlesticks are just going side by side, not going up or down. Throughout the market, you want the candlesticks to move in an uptrend or a downtrend. For instance, you want the market to either move up or down, up or down. You do not want the market to go side by side like this. This right here indicates that it's a ranging or consolidation day. You want it to go in an uptrend, downtrend, uptrend, downtrend, not side by side. So with that being said, if the candlesticks, how you see they're going side by side, when you typically don't trade anything that's just going side by side like that. Hence why you see the 200 EMA just going through, meaning nothing's really happening. And probably this is nighttime anyways while people are asleep. Like it's a bunch of the Asia session going on. So let's talk about the 50. The 50 is what I just pulled up, the orange. And that basically tells us as well average a price just during a specific time period, and the time period actually is 50 days. They just typically help us with the trend and how to identify when we should buy and sell. Most traders, if the candlesticks are above these EMAs, we like to look for buys. If the candlesticks are below the EMAs, we typically look for sales. The same goes for the 13 EMA. If it's closing below the 13, you want to take that sell. If it's closing above the 13, like something like right here, this candlestick right here, you typically want to buy. Now again, you couple these indicators with your trading strategy, your trading plan. Do not solely take trades based off of indicators. That is not smart to do.
Now that we talked about the basics, how to read a chart, how to go through technical analysis within a chart, support and resistance, market structure, indicators, you're ready to take your trading journey to the next level. Reading charts is an essential skill. All traders that are new, need refreshers, need to know and need to learn. To get personalized trading education to you, advanced market structure analysis, 24/7 real-time trading support. 2025, I'm here to help you get financially free. If you're ready to take your trading to the next level, click the link in the description and join the Mentorship Collective. I'll see you on the other side. Cheers.